Another trending ticker that we're watching this morning, and that is GameStop, reporting a surprise profit in the third quarter, boosted by some cost-cutting efforts. This coming despite the video game retailer sales falling 20% from a year ago. You're looking at gains here of just about 3%, putting that in context with the moves that we have seen most recently with GameStop. Not a huge reaction to this print, but when you take a look at these numbers, it's clear that some of these cost-saving efforts that have been underway at GameStop are paying off, at least for now. And we know they have been closing stores. They have been focusing on selling those higher margin goods. That looks to be at least helping with some of the fundamental numbers, at least up until this point. And I think the big question going forward, when you take a look at the core business, take a look at the fact that it's still struggling to really ramp up sales of its video game hardware, some collectibles there, the pressure that it's facing from some of the larger players within the space. When you take a look at Amazon, when you take a look at eBay, that story has not changed. And that really was one of the focuses here of Michael Pachter, analyst over at Wedbush, that we have talked to time and time again about the investor story surrounding GameStop. And to no surprise, he was saying that there is no turnaround, just stock sales to willingly foolish investors here. So there is lots of questions. Obviously, to no surprise, the fundamentals of this business still very much in question, but at least we did see some improvement on these numbers.
We did. It's also a business that needs to raise cash and has done so. They put together an at-the-market equity offer that essentially kind of added on to what they already needed to do and did do back in 2021 as well, even coming off of the fanfare. And so ultimately, when you're thinking about needing to bring on more liquidity, getting more capital here, that at-the-market equity offering, they sold 20 million shares. They raised about $400 million here. They still are a company that does not have an earnings call. So as of right now, there's not too much additional insider color that you're getting from the executives there. But if there's anything that you can sense in the environment and how the investor sentiment has really shifted in at least the social chatter around this name in 2021 then versus now, it seems like there's a lot more social chatter around companies that actually have some fundamentals plus have leadership that are either extremely viral or are just able to communicate better on social media. And it seems like Palantir, Tesla, we talked with Matt Kors, host of the Matt Kors show on YouTube, about this recently, and he said that that's exactly where it seems like some of the mentality shifted towards companies that actually have fundamentals, and then looking at the year-over-year, quarter-over-quarter growth that actually shows to be more phenomenal than what we're actually seeing with GameStop and not having to hope for a profitable quarter, which is what you're having to do with GME as of right now. Yeah,
exactly. When you take a look at the stock performance here, I mean, the company has made moves to take advantage of the rise that we have seen. It's sold about raising around $3 billion earlier this year through some of those share sales. You can see that one-year chart that we have up on the screen, up just about 73%. When you take a look at the cash and cash equivalents here at the end of the third quarter, that totaled just around $4.58 billion. Putting that into context, that was compared to just $4.19 billion the previous quarter. So we are seeing a bit of an uptick there as well.